What's up, everybody? On October 5th, I shared a video with you on a massive $999,000 cash secured put for SOFI, where I essentially sold a mini leap in the money for a $30 strike. That's absolute conviction on SOFI stock for January 2026. In this specific video, I'm going to update you with what's happening with that play. And some people called me an idiot and said that it's a terrible play. So let's see if those people have been right or wrong as of this date. If you're new here, my name is Adam. I'm 42 years old. I retired last year at the age of 41 years old. And I personally made over $1 million by selling options in options premium, selling options like cash secured puts and covered calls. My retirement is based on 3 pillars. The first pillar is asset accumulation and appreciation by buying multi-bagger stocks or by buying multi-bagger options. The second pillar is investing that money into high-paying yield dividend stocks and distribution stocks to pay my bills. And the third pillar, which I cover on this channel in depth, is to sell options to supercharge my retirement. Selling options quite literally is the closest thing I know to printing money. It's like dividends on steroids. And if you want to learn exactly how I do that, I have a link down below to my website where I cover this. If you sign up and you don't like it whatsoever, 100% money back guaranteed if you email me, no questions asked within the first month. The email address is tumstrpltr@gmail.com. The website is retiredasap.com. Every single week, I have a Zoom. Last week, Zoom was 6 hours straight. Everybody's questions gets answered, specifically catered to you, and there's so much more jam-packed knowledge on that website. Limited to 200 people. Currently, I have 111 people on the website. After 200 people, I'm shutting it down for the foreseeable future, and I'm going to work on building my community. Today, I'm going to dive and give you an update on that cash secured put SOFI position, which has actually grown from the original $999,000 play to a massive $1.59 million beast. I'm currently actually up on it, $30,641 or 12.58%. And just yesterday, I was actually up $86,000 or about 26%. And don't worry, I took advantage of the dip today and I actually added SOFX, which is a 2x leverage fund on SOFI, but I'm not going to cover it on this channel right now. I do cover it on my community chat with the rest of my community on my website. So let's break it down, talk about the price action, how theta decay is my best friend and your best friend when selling options and your worst nightmare when buying options, why I use technical analysis to absolutely snipe this trade, and what's coming with SOFI's earnings on October 28th. Buckle up. Let's get into it. There has been a lot of FUD when it comes to SOFI. Before the FUD of failing banks like Zion and like Prime Lend that actually have problems with small loans for autos, that actually brought the price down of SOFI. And in my personal opinion, it's an absolute nothing burger. And this is stacked on top of another nothing burger of tariff talks. SOFI's earnings is coming up, and I think they're absolutely going to smash it. So I'm taking advantage by selling cash secured puts, printing money, and by actually buying 2x leverage funds just for the short time to make a quick 60% snipe on that. The original position on September 30th, I sold 333 cash secured put contracts on SOFI with a $30 strike expiring January 2026. Yep, this is called a mini leaps play in the money. SOFI was trading at the time at $25-ish, almost $26, down hard from its highs of around $30 to $31, sitting right on the 50-day moving average. I put up $999,000 of my own money, no margin, no IOUs, straight from my account. And I collected for this $203,000 in premium, or $610 per contract. That's about a 20% return if it all works out. Fast forward, I added 200 more contracts for a $6 premium or $600 per contract, bringing my total premium collected to $323,000. Quick pause. A lot of people try to clown me and say, Adam, you never collected $1 million in premium. That's not possible. Literally, in just 2 plays this year, towards the end of the year, I'm showing you that I collected $323,000 in premium in these plays alone. Let's just assume this all works out. I keep all of my money. The haters can continue to hate and suck it. That's right. $323,000 in my pocket up front with the additional 200 contracts at a $30 strike. My total position size is now $1.59 million. That's 333 contracts plus 200 contracts for a total of 533 contracts. At 100 shares times $30, that comes up to a collateral of $1.599 million of my actual cash, no IOU, no margin, put up for this play. Again, the haters can continue to hate and suck it 2 times. As of today, October 22nd, SoFi trading at the current prices of $26.50, and I'm up $30,641 or 12.58%. Yesterday was a much better day before this massive drop of, I told you why, these bankruptcy filings. Yesterday I was actually up $86,000 in total or $26,000. So you can see how fast this can move. Now let's talk about why this is still a killer play and how time decay is working in my favor. Again, I'm not a financial advisor. This is purely financial entertainment. And this is definitely something that I share with my community amongst many, many other plays. I think on my website, I shared already 60 plays, 60 plays between buying, between selling, between options, between stocks, so on and so forth. If you want to know more, 100% money back guarantee within the first month. Just email me, no questions asked. Sign up to the website. You guys are definitely missing out if you don't. Now let's talk about the theta decay that I was talking about. Theta decay is just time decay. And why it's like my personal ATM when selling options. For those new to options, theta is one of the Greeks that measures how much an option's price decreases every single day as it gets closer to expiration. Since it decreases for somebody buying an option, it is your worst nightmare because your option is worth less money. Well, if you're selling an option and it decreases, then that contract is worth less, which is better for you. So time decay is your best friend. When you sell the options, like I did with these SoFi cash secured puts, theta is literally your best E ever. Because the options you sold lose value over time and that value goes straight into your pocket. So here's how it works. I sold these $30 strike puts expiring in January 2026, about 3 weeks apart. Each day that passes, the value of these puts decrease because there's less time for the stock to move against me. For example, when I sold the original 333 contracts, I collected $6.10 or $610 per contract. When I made my original video, those were worth $6.53 or $653. I was actually down 7% on the original batch, on the original video that I made. I'm not trying to fake anything. I show you wins and I show you losses. But my newer 200 contracts are likely worth less than the original $6. I sold them because the price has ticked up and time has passed. That's theta at work. That's why today the contracts in totality, including the first batch and the second batch, is worth less money than I already collected for them. My average collected was $6.06, and today these are worth $5.30. Yesterday, they were worth significantly less than that. It was somewhere in the mid-4s range. That is essentially how theta works. Every single day, those puts lose a bit of value. And if SoFi stays above $24, I am absolutely golden, preferably above $30. So you might say, well, why $24 when your strike is $30? It's because my break even is $30 minus the premium that I collected. So it's your strike price minus the cumulative collected premiums in case I roll or manage somehow. So that comes out to 30 minus 6 $24 per share. So anything above $24, even if I have to buy this at 30, I win. Although I do think this is going to be above $30. So as long as SoFi stays above the $24 by expiration, I keep the full $323,000 in premium. However, the premium that I actually collected goes into offsetting that $24 price off of the $30 that I said that I'm going to be paying. Preferably, I want this to be above $30 where I don't get assigned, I don't have to pay, and I keep my full $323,000. But that's a little bit of insurance, and this does not take into account managing the position. Now, theta makes this play sweeter because the closer we get to January 2026, the faster those puts lose value, specifically in the last month. So in the month of December or so, these things are going to be losing crazy theta value, time value, and that theta increases as the time decreases of the contract, especially if SoFi stays above $30. The theta is going to go crazy. Time is literally money in my favor. So let's talk about how you use the technical analysis to time this trade. I love selling cash secured puts when a stock hits key support levels. And for me, one of those key support levels, not the only one, but one of them is the 50-day moving average, which is the second strongest indicator you could look at in terms of moving averages. It goes 200-day, followed by 50-day, followed by 100-day, followed by 20-day. As you can see right here, this is a green line on my trading view. Take a look. And it is absolutely my go-to. This is a chart of SoFi. On September 30th, when I sold the first batch, SoFi was trading at close to $26, sitting right on the 50-day moving average. And you could see it in the screenshots that SoFi touched that green line and then bounced, just like it's done before. I also looked at the stochastic isolated, the RSI, which are screaming oversold, and the stochastic was in single digits and the RSI was near 30. Showing SoFi was beaten down for no good reason, just FUD, and this was amplified on my second sell, as I mentioned in my last video. Now, if you want to know more about the FUD, just check out Tanner's channel up above. He made a video on this. Click on the link up above. When I see a stock I know well, like SoFi, and this is why I tell everybody I like to sell my options on stocks that I know inside and out and continuously over and over again. So when I see a stock like SoFi hit the 50-day moving average with oversold indicators with nothing but positive fundamentals, it's like a neon sign saying sell puts here. And that's when I pounced on this in the money cash secured put, betting SoFi would bounce back towards $30 or higher. Now let's dive into the strategy. Selling in the money mini leaps cash secured puts for a massive 20% upside. Most of the time I sell out of the money puts with a 20 delta or less 3 weeks out, giving me about an 80% chance of winning, collecting 2 or 3% continuously every single month. But this specific SoFi play was different. It gave me an opportunity to increase the premium collected based on calculated risk. I saw an irrational drop, strong technical support, and a company I believe in, so I went in aggressively with in the money $30 strike puts when the stock was around $26. Why in the money? Because it maximizes the premium. I collected around $6.06 per contract in totality, which is a huge compared to an out of the money put that might be giving me $1 or $2. The trade off is risky. If SoFi stays below $30, I might have to buy the shares at $30, but my break-even point is still $24. So I'm still good as long as we're above that. Mini leaps like the January 26 expirations gives me more time for the stock to recover, plus higher premiums due to longer duration. It's a calculated bet based on knowing SoFi's fundamentals. Anthony Notos and the team are firing on all cylinders with tranches at $25, $35, and $45, incentivizing management to push the stock higher and using TA to time my entry. Let's talk a little bit about what's happening with SoFi. SoFi earnings are dropping pre-market on October 28th, just 6 days away. I'm pumped because I think Q3 is going to be an absolute banger. SoFi is known for giving triple beats, and I think this time is going to be no different, and I think they're going to absolutely smash the number of members that they have. Rate cuts are here, the macro environment is improving, and SoFi's been executing like absolute champs. If earning pushes SoFi to $30 or higher, like I predicted, I might be able to buy this back for a few dollars, keeping several dollars in my pocket per contract of the $6 I collected. That's a massive win in a short time. Even if this doesn't pop right away, I'm fine holding this until January 26th. Theta's working for me. As long as SoFi is above $24, I'm okay. However, preferably I want it above $30. Worst case, if it drops to 23.50, the bottom of the Bollinger Bands, I'm still confident it'll bounce back, especially with the 50-day moving average holding strong. Now, I could be completely wrong, but this is my bet, and at least I could justify why I'm doing what I'm doing. So there you have it. My $1.59 million SoFi cash secure put play, up 12% today, was up 26% yesterday, with $323,000 in premium collected. This is how I supercharge my lifestyle using technical analysis to absolutely snipe my entries, state of decay to stack cash, and in the money mini leaps to maximize my upsides when opportunity arises. I don't do this all the time, but this was an opportunity. This isn't for everyone. It's an advanced play, but it's how I built my wealth. If you want more details on my plays, join my website, retiredasap.com. We have weekly Zooms every Monday at 10 a.m. Eastern that goes on for hours. Every question gets answered. Nobody gets left behind. And there's so many other extras on the website. 100% money back guarantee in the first month. No questions asked. As long as you email me, tumstrpltr@gmail.com if you want out. This is financial entertainment, never financial advice. Do your own research. Thank you very much. I appreciate you. And if you guys want more content, just click on the links up above. I'll see you guys in the next video. Peace out.